that will be kind of a real tactile thing for most users, is just faster speeds instantaneously when they need it and when they want it.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome to Seeking Alpha. I'm your host, Jesse Redmond. Today, I'm joined by George Holmes, CEO of Resonant. George, thanks for joining us.
Yeah, thanks for having me.
So I'm excited to talk about the company, but I also want to learn a little bit about you. Can you share a bit about your background and how you became CEO of Resonant?
Yeah, it's great question. It's been a long journey. I started as a finance and operations guy back at the time of the MFJ, working for a telecom equipment company. So that's early 80s. When they broke up AT&T to create the Bell operating companies. I spent a couple of years being a finance guy, and then went very quickly into sales. Have been a sales and marketing guy since the late 80s, and have been doing startups and turnarounds. Have had some pretty nice little successes. Built a telecom component company from about 75 million to 175 million in about a year and a half. We did that, and then we sold an optical component company to Lucent back in the late 90s. We were doing about 50 million, 60 million in revenue, and sold it for just under 3 billion. I ultimately ran Lucent Microelectronics sales organization in North America for a couple of years, and then virtually retired, started doing pure play startups. And I've been doing that ever since. And most recently, have done two public venture-based companies. This is the second. I joined Resonant in 2016 as the chief commercial officer, and took over as CEO a year later, and took over as chairman and CEO about a year and a half after that. So, been with the company since 2016. We've had a good run. We've continued to kind of build on the premise of being a licensing company in the field of RF components, and we think we've got some pretty interesting things to talk about today.
And in terms of your background, I'm curious what you see as your strengths as a CEO, and also something maybe you're not good at or you're trying to improve upon.
Well, I would tell you that starting in finance was fundamental. I mean, understanding what makes a business tick has made me a better sales guy when I was a sales guy in the first part of my career. As I took over and started doing a more strategic development from a business development perspective, I think that foundation has really helped me. Clearly, becoming the CEO of this company was all leveraging my sales and marketing background, and the fact that I had a good finance background. I think the one area that obviously when you work with 50 engineers and 20 of them are PhDs in computational physics, I'm just a smidge behind them on the technical front. But I do try to keep up from an applications and marketing perspective. But my flat spot is engineering. I don't have the ability to say yes or no, whether it works or it doesn't work. I have to trust other guys. And so, clearly that's part of being in business, right? Is trusting the guys around you. And we happen to have a great group of guys here.
And how would you describe the Resonant business to someone that's not familiar with it? They meet somebody and they say, "Oh, that's cool, George. What does Resonant do?"
I think the elevator pitch is we're a licensing company. We license technology to the largest filter manufacturers in the world that allows them to do what they do faster, better, cheaper than they could do themselves. And we do that based on two fundamental pieces of technology. One is a software component that we developed ourselves. We have the first and what we believe is only three-dimensional finite element modeling tool for acoustic wave filters that allows us to design things fast. And then we have a massive IP portfolio, largely focused today on our XBAR technology, which is a bulk acoustic technology designed specifically for higher frequency. So we don't have the limitations that some of the legacy technologies do. and puts us right in the sweet spot of where the market is today and where it's going. So those two things combined are the technical background, and then you couple that with a deep technical bench from a people standpoint, and that's what allows us to do what we do for customers.
And how big is the business, maybe in terms of headcount, and where are you keeping the employees these days? How much of the in-office stuff are you doing versus how much of the home-based COVID lifestyle are you still doing?
It's a great question, and I would tell you it's an ebb and flow. I mean, obviously we're very flexible with our employees, and because we are heavily engineering focused and design focused company, a lot of the work that we do can be done remotely. We don't spend all of our guys don't have to be in the lab or in the building every day. Our labs and our facilities have been working full time since COVID began. So our teams have been in, social distancing and doing what they have to do, but they're in the office every day. Balance of our employees are probably 2 or 3 days a week in the office, because that, touchy feely, having the ability to walk around and talk to guys is really, really important, but we're giving them the flexibility to work from home when they need to. Our facilities today are in Santa Barbara or Goleta, California. That's where our kind of main technical center of excellence is. We also have a facility in Northern California, as well as a finance and operations team in where our headquarters is in Austin, Texas.
And how big's the headcount?
Total is just, I think last quarter we were pushing mid 60s. It'll be a little bit bigger than that this year.
And let's jump into the technology, but let's start out giving people, maybe a bit of a background or an overview. Talk to me about, and you're a great guy for this because you have this long background in the telecom space, but kind of talk about the evolution of the Gs, the 3Gs, the 4Gs, the LTE, which was hot for a while. Now we're moving into 5G. Just kind of talk to me about where we are in that evolution and why it matters.
Well, I mean, clearly, if we sit back and let's just use as a proxy for technology, right, is the iPhone. I mean, 2007 with the first iPhone, a fairly simple device compared to what we have today. For what we do for a living, which is RF filters, that first iPhone had less than a dozen filters in it. Today, the most recent iPhone has about 100 filters in it. So, okay, you sit back and you look at that. What is that? What's driving that? And that's our insatiable demand for data, whether it be, started out with emails and videos and movies and things of that nature. Now we want to do VR or near VR on our phone. So that need for bandwidth is just continuing to increase. But what does that truly mean? Let me step back a little bit and kind of speak to what is a filter and what does it do, because that may give a better understanding of why this complexity is meaningful. I mean, filters are basically the devices that allow you to separate signals on your device that are coming into your device. So if we think about the early iPhones, I mean, you had basically a 2G signal coming into the phone. And technologies, especially technologies, wireless technologies, they have product life cycles that are 20 to 30 years long. You have this slow ramp at the front end, and then a nice bell-shaped curve which lasts 10 to 15 years in the middle. And then you have this super long tail. And so when you talk about devices, the handsets that we carry today, they have all the legacy technologies as well as the current technology. And that's not only for your communicating signals for us speaking, but it's also your Wi-Fi, it's also your near field, it's also your GPS, it's also your Bluetooth. All of these things have radios and must be backwards and forwards compatible. So if you look at Wi-Fi, for example, you have the 2.5 Wi-Fi, you have 5 gigahertz Wi-Fi, now you have 6E. Your device has all of those things, and it has filters for both directions, transmit and receive. So just that in and of itself, you can see you have a handful of filters just to support that. And it's all about getting data with a wider pipe to the phone. And what the filter does specifically, it's like the little fence between these signals so that it doesn't allow the signals to overlap. So you keep your signal in the right lane or the right highway coming into your phone. One when it's not working well, you see things happen, which we've all had happen. We've been talking on the phone. You're talking on the phone for a period of time, and your phone gets hot. Your phone gets hot because your filters aren't working well. And the power amplifier that transmits the signal is having to work harder. So it gets the phone hot, your battery life goes down. That's a real world experience where filters aren't working well.
And when filters are working well, what is their job and what role is Resonant playing in that?
So their job is to really protect signals from bleeding over into the next channel, right?
Okay.
Think of them as fences again. And it's so you don't get this channel to channel interference. The big thing today that everybody's, focused on is the fact that 5G is coming. It's not here yet. It's clearly you can get devices that have 5G capability, but that true user experience that we're expecting, and for most of us, the one that'll be the real world experience for us, we're running through the airport with our kids or, ourselves on a business trip, and you want to get that last minute download of a movie to keep you entertained on the airplane. Today, that's a plan ahead, do it from home. It's going to take, 20 to 30 minutes to download a high def movie. Where if you've got a 5G phone with a full capability of that device, it's 20 to 30 seconds, right? So that will be kind of a real tactile thing for most users, is just faster speeds instantaneously when they need it and when they want it. We're not there yet. It's coming for sure. We're seeing, infrastructure deployment and, just the capabilities of the phone themselves is really got to catch up and get us to where we want to be to get that full rich experience. And obviously, the big thing in the news today is the delay in the deployments of 5G for both Verizon and AT&T because of the issues with airplanes or the potential issue with airplanes. And so obviously that's an area where everybody is very concerned, as they should be. But T-Mobile going very fast. This is a boon for them for sure.
And how should we think of the total addressable market for the space in which you are working? And what I mean by that is 5G. There's I don't know how many hundreds of millions or billions of people using cell phones out there. Yeah, billions, right? Out there using cell phones these days. But to an outsider like me, it seems like we talk a lot about 5G, but in terms of it impacting my life or improving my experience, I don't feel that too much yet. And I also don't have a ton of frustration around my current cellular speeds. I'm not downloading big movies very often. Sometimes things are a little slow and that's frustrating, but is there a risk? I guess I'm asking a couple of questions here. One is, what is the TAM for 5G? How should we think about that? And is there a risk of good enough technology here and that most people don't need the 5G?
Well, that's a great question, right? I mean, did you need the first iPhone? Well, when you didn't have an iPhone and they first came out, I don't need one of those. I mean, I'm not watching movies on my phone. I'm not taking emails on my phone. I'm not really working on my phone. Where today, if I didn't have that capability, and it kind of ate on you, right? It kind of grew on you. I mean, today, if you leave the house without your phone, boom, you're spinning around and you're going back, go get your phone because your life's there, right? You get your email, you get, you get all your texts, you get, all the communication with family, everything is there. It's like your computer that you carry with you. And the processing power is obviously the same as most computers back at the time those devices were introduced. So I think it's gonna creep up on you with, your user experience. I think obviously some of this is, if we sit back and looked at today's phone and its capability versus the 2007 phone, it was, it's an apples and oranges comparison. But it's I think what we will find is that as we get applications that drive us towards this technology, it will become such that we can't live without it. And whether you're a gamer or whether it's just something as simple as your desktop computer now has VR or near VR, and you want to be able to take that experience with you, it's those kinds of things that it'll just kind of sneak up on you from a requirement in these devices. I mean, do you absolutely care that you can download a movie in 30 seconds today? Well, maybe not. That may not be a user experience that you care about. For me, if I'm in the airport, which I am almost, 2 or 3 times a week, it would sure be nice if I could sit back and last minute, boom, pop a movie onto my phone. Would it be something that would drive me to go buy a new device? Maybe, I don't know. Depends what other things I was getting there. But I think once I had it, and that's what became my norm, going away from it would be really, really hard.
Mm-hmm.
Right? I mean, think about before you had Wi-Fi on your phone, and what you just come to expect today from a usability perspective. You would be hard pressed to buy a phone and have that as your primary device if it didn't have Wi-Fi.
Mm-hmm.
And yet it wasn't that long ago where your phones didn't have Wi-Fi. So I think it's one of those things that will sneak up on us for sure. And probably the thing that I think people find it hard to appreciate is the sheer time it takes for these technologies to get deployed and how long they last. I mean, I talked about 20 to 30 years, and you kind of go, really? Is it really that long? Well, we've been talking 5G for 5 years already, and it's going to be another 2 to 5 before we get the kind of deployments that's going to give us this full, rich user experience across all markets. I mean, yeah, there'll be spot markets that get better performance sooner, but across all markets, it's going to take that long. And, and we will still be living with 4G for a long time and 3G for a long time, as well as they taper off and are on the backside and the tail of the product lifecycle curve.
Is there any easy metrics surrounding how much 5G is being used? So let's say what percentage of iPhones in the US are running on 5G right now?
I don't have that stat. I'm sure it's readily available. I mean, it's you look at the latest introduction of the iPhone and their sales. I think that would kind of get you starting to creep into it. I mean, there were 5G enabled Samsung phones that came out last year as well. I would think that number is pretty low at this point. I mean, from having that full, rich user experience, I can tell you from a filter sales perspective, it is definitely increasing. I mean, the market is continuing to grow. It's going to continue to grow over the course of the next 5 years, especially in this 3 to 6 gigahertz space. I think where we're seeing massive growth beyond that is in the the 6E and the ultra wideband areas of the applications that are going to drive kind of next generation filters. That's going to kind of push up the frequency bands that these devices have to operate on, which is for us is really good because that's the space we live in. We're really not a player. Our new technology doesn't really play in the sub 3 gigahertz space. We're in the 3 to 6 gigahertz space is kind of the sweet spot for cellular today. And then we look at the kind of the 6 to 12 is what's coming, whether it be in the Wi-Fi or UWB or in what's coming next out of the standards bodies. So I think the future is pretty bright in that area for companies like ours.
And you mentioned the metaverse and AR type things, and I think that's particularly interesting. I was having a conversation last week with CEO of a company that does a bunch of things related to AR and the metaverse. And they were making the point that Apple may come out with some sort of glasses this year that really open up the metaverse type space, kind of like the Google Glass back in the day, but a significant improvement that incorporates more of the Oculus type features to it, but with something that's a little more attractive from a hardware perspective. Do you see yourself playing in any of those spaces in terms of the glasses, the headsets, the VR, the metaverse accessing stuff?
I think what you'll be looking at there is the higher frequency filters that actually enable those devices to do what they need to do at high frequency, because that's where they're going to get the kind of bandwidths they need to operate. Clearly, we're engaged with the component manufacturers that deliver components into that space. We're talking to some of the kind of the end OEMs about what their requirements are going to be for these next generation devices. Because clearly where that becomes or has the potential to have a kind of ubiquitous deployment is when they're all wireless, right? I mean, the connected devices to get bandwidth today are not that interesting. They're great for the gamers who are in the, connected to their gaming console, but where it becomes real for you and me is when it becomes the lens to our, it's the screen for our computer. We're just sitting at our desks, watching, working on our computer, which is actually displayed through the lens in our glasses. In order to do that, you've got to have a wide pipe to those devices. And those wide pipes are enabled by high frequency filters, which is what we design and license to the major players on the planet.
So let's talk a little bit about that. Who are the customers currently for the Resonant products?
It's a great question, and one that everyone asks, and one we always say we don't talk about our customers except for one, and that's the one that we've actually got a strategic investment from. So we actually do have to disclose who they are. And if you look at, and I'll come back to that in a second, but if you look at the marketplace for high frequency filters in the RF space, there's really 7 companies that own 95+% of the market, and everybody else doesn't matter, right? It's Murata, Qualcomm, Qorvo, Skyworks, Broadcom, Weissol, and Taoyuan. That's 7 companies that basically between them own it all, 95% of it. Everybody else is kind of, whether it be all the Chinese manufacturers or the other startup companies in space, they're clamoring for 5%. That doesn't matter from a volume perspective, and really not matter from a top line revenue standpoint. So of that 95% player, the largest player in that space is Murata. They have north of 35% market share in the area that we care about, which is acoustic filters and duplexers. That's the space where we play, where we license designs to those types of companies. And Murata happens to be our partner and our customer. They made a strategic investment in us 2 years ago. We signed our original deal with them that was for the development of 4 bands for $9 million. And that's a prepaid royalty. So we got paid in advance of us actually seeing them have products in the marketplace. And then we subsequently last October expanded that deal to another 4 devices. And then we increased the ASP from $2.25 million per device to a range of $2 to $9 million per device. So had the potential to significantly increase that. And the first release of that was for a $7 million band, which based on our average royalty rates is worth about $70 million in the end market. So our business today, currently with them, is all based on prepaid royalties. Fantastic customer, great technology play. If you look at what they've been saying about our technology over the course of the last 3 years in their annual shareholder meeting minutes, the first year we got a kind of an honorable mention. The second year we were part of their strategic roadmap for the future of RF technology. And today they talk about us being one of the critical components for them on their roadmap going to high frequency. And of the 4 companies they talk about, we're the only one that is just a wholly owned, is not a wholly owned subsidiary of theirs. We're the only publicly traded company.
And am I correct, George, that contract expires in a couple of months?
The exclusivity for the original agreement expires at the 1st of April, last day of March. And so what that exclusivity did, they got exclusivity for their as a quid pro quo for their strategic investment. And they got exclusivity for 30 months in the field of mobile. And at the time we signed that agreement, that was really the lion's share of the acoustic filter market, other than infrastructure, which is much smaller volumes. What has changed since then is the opening up of the CPE market through Wi-Fi 6E and now UWB. So the market is expected for acoustic filters to almost double based on those new applications, because historically your Wi-Fi router had a ceramic filter or an IPD in it. So it was a very simple filter, didn't have the types of rejections that, an acoustic wave filter has. And now that we've got these new high frequency Wi-Fi devices that are operating up in the 5G area, they've got to have great low band and high band rejection, i.e. rejection being what keeps those signals from kind of blending into the Wi-Fi signals so that you don't have poor performance. So it's a neat opportunity. It's a great thing for the acoustic filter market, It's a great thing for our customers, but at the, ultimately at the end of the day for us, we look at all of these top 7 companies as potential customers for us because we're a licensor of technology into this space.
And I read you're working on new filters and design technology to work with 6G. Can you elaborate a bit on this? And in terms of timing, when do you see 6G hitting the market? And what is 6G going to do for us that 5G doesn't?
Yeah, it's a great question. I'm probably not the best person to answer that, but let me see if I can take a stab at it. So, I mean, clearly the big difference in our technology versus all of the legacy technologies is our technology was developed with a white sheet of paper, clean sheet of paper to start looking at the application requirements for 5G. Where the legacy technologies from all of the major players was designed specifically for 4G and lower frequency. So the big difference here is the fundamentals of the physics behind the devices. Traditional bulk acoustic filters are built upon aluminum nitride BAW. All the major players use the same fundamental substrate, and the fundamental structures are the same. It's a 10 to 14 step manufacturing process to build these acoustic wave filters. When we were looking at these new high frequency applications, we knew that one of the critical requirements was going to be wide bandwidth. And the legacy technology has some inherent difficulties with going beyond, about 4% bandwidth. And the minimum requirements for 5G is about 10% bandwidth. Well, you can take these existing technologies and make them good enough by doing things like putting additional metal layers on the device, scandium doping, or subbanding, putting 2 bands together and creating a wide band through 2 narrow band filters. Challenges with that is it's more expensive. You have penalties with size, penalties with reliability. And so when we looked at this, we said, hey, we got to look at a different way to go approach this problem. And because we are a software company first, we can do this design work very, very efficiently. And we looked at a multitude of different substrates to go after and tackle this problem. And we ultimately settled on lithium niobate, which gave us a inherent and native bandwidth of minimally 10% and as high as almost 30% bandwidth with this new technology. And it's ideally suited for 3 to about 12 gigahertz. So we can design devices for not only 5G, the 3 to 6 gigahertz range. We can cover off on these technologies that are currently in play today in the kind of 6 to 9 gigahertz range, 6 to 7, 8, 9 gigahertz range, which is Wi-Fi 6E and ultra wideband. And the new 3GPP standards are talking about different frequencies up to 12 gigahertz. And this technology can satisfy all of those. So now coming back to your question on 6G, again, a higher frequency technology that is going to be probably starting to see applications in the market. Probably the end of the decade is kind of what we're hearing is, 28, 29, 30 is kind of when we'll kind of be in that kind of early stages of that technology understanding and development and deployment. Kind of like where we are with 5G, we consider ourselves kind of probably 3 to 4 years into it. We'll see that as kind of starting to take off kind of end of this decade.
Okay. Let's talk a little bit about making money. In terms of reading about the company, I sense in the investor community there was optimism around your technology and a bit of impatience around some of the financials. Particularly frustration around turning profits is what I sensed. In Q3, you lost 14 cents, that's using GAAP EPS, but at 400K revenue missed by 390K, and this was down 70% year over year. Can you talk a little bit about how you see those financials and if you think some of the impatience is justified?
Well, I mean, here's what I would tell you. We are one of the few companies that have continued to give guidance. We've met guidance for the last 5, 6 quarters in a row. We said we'd be kind of, when you're looking at a focus on numbers which I would consider, relatively small.
Mhm.
If whether it's 600,000 or 450,000, it's kind of your massively small numbers. What really is probably more interesting is what happened with us signing the deal with Murata, almost 3 months early, that's worth upwards of $36 million. And we took the uh, first deployment of that contract almost immediately in October, which we announced at that point in time, which is a prepayment of $4 million, $1 million per each band, and then a 50% payment on the first band that was released for another $3 million. So we tend to focus more ourselves on the bringing in cash from a customer perspective, a billing standpoint, because when you're in a royalty business like ours, there's a couple things that happen. One, when you take prepaid royalties, cash comes in, revenues can be zero, because you in an ASC 606 world, you get to turn cash or billings into revenue when, based on the amount of effort that's put in during the period. So if you have 100% effort that happens over 12 months, it's not a linear divide by 12 of that chunk of dough. It's a function of effort in each individual period. So you could have, a kind of a sine wave from an effort perspective, and you would see that revenue conversion would be a little bit lumpy. And when you have eight bands under contract, you're going to have a lumpier revenue conversion than when you have 12, and when you have 15, when you have 20. And we've said we would continue to ladder these things up, and that lumpiness would smooth out. We've been successful in laddering these deals up so far, and we think we'll continue to be. We have been ahead of schedule on meeting the technology milestones of these contracts, and ahead of schedule on developing new contracts, like we did with Murata, and like we did with the announcements of beating the technical milestones. So I think that those things combined give a good trajectory, but I think where you see impatience from an investor perspective is people think about royalty businesses and they think about the end game. When you get to a royalty business at scale, they drop 80 to 90% to the bottom. Those are great. Everybody thinks about ARM, they think about Tesla, Siva, and they think about these companies. They go, man, they have great bottom line results based on a top line that may not be as large as a product company, and yet they fail to remember how long it takes to get there. Companies like ARM, 10 to 15 years to get the first $1 million in revenue, and that's before they started to ramp. We got there significantly sooner than that. Do I think we'll be at the $2.5 billion in 20 years that they were at, that will ultimately sell for $35 billion? Well, I'd like to aspire to that, but it's a lot of work that has to happen between here and there. And I think that's the challenge. I think because most investors, when they see us do $3 million in revenue last year, I'm talking 2020 because we haven't reported 21 yet. When they see that $3 million, they go, $3 million, okay. And they're losing, at that point, 27 or whatever the number is. It's in that range, and they go, that's interesting, but they don't translate that into product sales of roughly 10%. We're about roughly a 10% royalty business of $30 million, and they don't see that is the kind of money that we're enabling out in the marketplace. It's that transition that I think is difficult. So if you look at us as a business, we have talked about, what it means for us to get to cash flow break even, about $30 million in revenue. And it's actually $30 million in billings gets us to that cash flow break even neutral perspective. And that would be about $300 million in top line revenue from a product standpoint. But you compare us to other small companies in this space, for us, $30 million or $35 million drops almost $5 million to the bottom. We're a fabless or a pure, fully integrated model. At $35 million, you're going to still be losing $100+ million. So this business gets very, very efficient once you get to cash flow. And we've charted a path to cash flow. We've said it takes between 12 and 15 concurrent devices under contract for us to be operating at a cash flow break-even basis. We currently have 8 under contract. Just so happens that we increased the ASPs from 2.25 million to as much as 9 million, which obviously reduces that number potentially. So, well, I understand the frustration, but it's one of those things that as we continue hitting milestones, continue increasing the footprint of the revenue generation, I think we're going to collapse the time it takes for us to get to that cash flow break-even perspective. And at that point in time, all this history will be forgotten. All everybody will know is I knew it was going to be there because they have a good technology and a good business model.
It's all obvious in hindsight, right?
Yeah, well, I mean, trust me, I've built a number of semiconductor companies from the ground up. As you know, you follow the space, it takes 10 to 15 years to get a true pure play startup semiconductor company to scale to where they're making, till their cash flow break even. And sometimes they never get there. It's a lot of hard work. And fortunately, we got lucky a couple of years ago with the invention of our XBAR technology. I think it's the right technology at the right place at the right time. And we're doing everything we can to expand customer adoption on that. And if we are able to do that, I think it will ultimately have a good outcome. But a lot of work, a lot of hard work still to go. And we're heads down doing everything we can to make that happen.
And on this cash flow topic, I noticed that your share count since 2015 has gone from 7 million up to 63 million as you're using equity raises to fund the growth. But this is at the same time, obviously diluting investors. Do you see further debt or equity raises on the horizon?
Well, all I can tell you is what we've talked about at the last quarterly call, which, we said we thought we were in a good position through the balance of this year. And that's all we've said. We haven't given any additional guidance beyond that. We ended the last quarter with a little over 15 million in cash. And then we announced we brought in literally another 13 million almost within a couple of weeks. We had an investor that reached in and bought above market off our ATM. And then we also made the collections with the kind of this first two milestones with Murata on the new deal. So that brought in another 13 million. So you put those two things together and look at our run rate and our projections. We think we're in good shape for this year.
Okay,
what we did last quarter.
So you don't expect any raises in 22?
We didn't highlight anything at that time.
Okay, gotcha.
I mean, I think the big thing for us is we are so focused on bringing in additional prepaid royalty deals, and we've been successful in doing that so far. And we know we've got kind of an opening up of the entire market coming April 1. We're just really focused on that because, we're all stakeholders. So we're doing everything we can to make sure we live on customers' money as quickly as we can do that.
And in terms of risk, George, what do you worry about? What are the concerns with Resonant that keep you up at night?
It's the motherhood and apple pie one, right? It's you don't know what you don't know, right? We know that legacy BAW technology is built on aluminum nitride. We know that it runs out of gas completely at 6 gigahertz. We know that all the new applications are above 6 gigahertz coming after 5G. That should be our sweet spot. That should be our, our real place for us to shine. But our customers are all massive companies in and of their own right. And the real challenge for us is, we think we know what's going on there because they're customers. We talk to them. But at the end of the day, you don't really know what's going on. We don't know that pick your name, whether it's Murata, whether it's Qorvo, whether it's Skyworks, whether it's Qualcomm. They can invest billions of dollars in next generation technologies, and we don't find out about it until it gets into the marketplace. And so, I think that's the thing that really has me concerned is I don't know what I don't know. And we can only invest at the rates we can invest at. And, we're a little company and we'll spend, rough numbers, about 7 million a quarter. And, that's about all we can do. And so I think we're in a good spot. I know that legacy technologies are hard to change. I know it's hard to migrate a foundry that's built on one technology to another. But when you're dealing with big guys like this, it's what you don't know.
My last question for you is, what are you most excited about for 2022? What are you excited about for this year?
Oh, that's a great question. I think the big thing for us is getting our first non-mobile customers, getting that technology moving quickly into the marketplace, in large part because those design cycles are much shorter than a handset. It's good news, bad news, right? I mean, the shorter design cycles, but it just also means redesign cycles are short too. But I'm really excited about that. I'm excited about expanding our relationships with our existing customers and the opportunities that's going to create. And the fact that we see our exclusivity end here at the end of March, I think is going to, the world's going to be our oyster on that front. It means we can take the technology that we've already proven, that's already been sampled to all the major players by our current customer, and we can share that with everybody else and see what they think.
Well, this has been fantastic. I appreciate you joining us on Seeking Alpha, and I wish you best of luck moving forward.
Yeah, great. Thank you much.